wait for a few more people. And Deanna, have you been in a webinar before? Or you new?
Hi, nice. It's Jason. I'm using my daughter's Teams.
Ah, okay. How you doing, man? You good?
I'm good, good. I'm good. I'm good.
Good, good, good. Jakey boy, you alright, mate?
I'm good. How are you?
Good. Very well, thank you. Very well. Knackered. I've had a busy day today, guys. I've been doing loads of housework. I was training. I went to gym this morning. Got a nice training session in, and then I've been sorting out, putting the lads. We bought a swimming pool this year. And I thought it'd be one of those little pop-up pools, and it turned out to be this humongous, like 8-foot monster. So I finally put that down, which is a pain in the ass. And then I had to fit a new washing machine, take the old washing machine to the tip. It's been a busy day, Right, I'm just gonna start. We've got a couple of minutes left. I'm just waiting for a couple more people just to get in. Make sure everything's loading up. I was hoping we are going to have at least 10 people on today, but let's see. I might pop out another message in the group quickly. Wait there.
We're at an all-time record, didn't we? With 6.
I know, 6. Can you believe it? Oh my gosh.
It seemed like it's me the newest 1 year.
Right, 2 seconds. I'm just very quickly. Do you know what I'm going to do? I might put a post up in the actual. Put it on Instagram. Don't know if I can. How can I do this? Can I do that? Nah, it's not gonna work. Can't do a story from desktop app. Never mind. Give it a couple more minutes, guys, and then we'll get going. How's everyone's trading been lately? It's been a shit few weeks. I'll tell you that. It's been shit, like really tough out there.
Last week was a massive chop, man. Even for EDCs, just lose. That's how you lose money. It's like rebalancing and all that stuff.
Yeah, 100%. I've had a funny October as it was, and then a tough. Yeah, last week was tough. It's just been very up and down, and I'm finding that positions aren't really holding like they normally would. Like, look at this. This is last week's price action. I mean, very clearly in a range, isn't that? What's that? That Monday, Tuesday, Wednesday. And the only kind of big moves we're getting at the moment are these spiky kind of news moves. And there's almost no, unless you're like a wizard and you can catch something like that, there's almost no opportunity to get into these moves. Sometimes I'll catch them every now and again correctly, but you could be setting up for something like that, or you could be setting up the wrong way round. I think the week before last I caught a couple of them wrong, and just it's a dangerous way to trade. I only really do it if I'm doing really, really well, if I've had like a really good week and I've got percentages to play with. But if you catch them right, then they do turn out quite well, to be fair. But hey ho, can everyone see the screen all right?
Yeah, man.
Yeah. Cool. Right, so what I want to talk about this evening is a couple of ways to kind of maximize your trades and maximize your trade entries. One of the things I've been playing around with prior to kind of this month, when trading was a lot better, and this is something that's really worth noting, is that this is something that you should use when the markets aren't ranging like this. Like, if we go to the daily chart, this is Euro USD, okay? If we go to the daily chart and we look at last week's price action, you'll see that we had 1, 2, 3, 4 kind of, non-breaking candles. It didn't really close above or below anything. And, you had this big spiky kind of news move here, and then all the other candles have just kind of played around within the range of that. Now, what is probably good is that we are likely to have some sort of movement. If you look back at kind of previous price action, you look back at any weeks where you have these periods where price just kind of stalls, they don't normally last that long. And let's just try and find another one. There's another one kind of here. What you normally find here is in these moments, orders are collecting and price is consolidating. During that time, the same sort of volume of orders are going into the marketplace as in these moves. What's happening in these big impulsive candles here is the buyers are the strong money. They are outweighing the sellers, and therefore, naturally, what happens is that the price moves up like this, in a very quick fashion. when this happens here, there's still orders going into the marketplace at similar levels. What happens is that we create a load of orders kind of above and below price, and you get this kind of consolidation. You see, this is what people talk about when they talk about these kind of congestive moves. So you hear, you know, pattern-based traders, they'll talk about this as being, is it a pennant, Jake? I think that's what they call it, something like that. Pendant, something like that. Okay, like that. All right, and the theory of it is, and the reason why some of these patterns will often work out is what will often happen is you'll get a move like this, or what I think is, well, what I'm hoping is more likely a move like this. Okay, now my kind of bias on Euro USD at the moment is some sort of short-term move to the downside. Now this could be either down to here, this could be either down to here. It would make sense for price to come and retest one of these areas before pushing up higher. Overall, as you can see, we are massively bullish. However, it would make sense after this big lug up for a bit of correction, maybe to there if we're really lucky, before price moves higher. We have obviously cleared out these liquidity points here, which is a pretty major point. This is a daily chart, remember, team. So, you know, for price to change structure, as we have done here, and then we create a new structure moving up to here, that's a pretty bold move. That, you know, we're breaking multiple structures here, we're breaking multiple highs, we're clearing out liquidity points, and there would have been a lot of money sat above that. We have tagged into this supply zone here. I don't really trade kind of old supply and old demand. I kind of see them as they're done, but as you can see here, we have wicked above that. Wicked above, started to break down, and I think a few of you got onto that, those sells. I think, Jake, you caught Aussie down, didn't you? Whereas I took the Euro.
No, I didn't.
Did you not get it in the
Danny
end?
Did. Nah, Danny did.
Okay, well, look, as you can see, we have wicked above that liquidity high, and whilst I don't trade these, I wouldn't see this as a zone to be specifically trading from. The reason why I don't trade kind of old supply and demand like that is the orders that are most reliable. So when I talk about orders, I'm talking about what happens when price reaches an area where orders are sat. So we talk about liquidity sweeps, and those liquidity sweeps, they're taking out highs and lows, they're taking out stop orders and things like that. The algorithm is then kicking in, and then it's reversing price. I personally don't say, right, this is a supply zone that I want to trade. It's something that I will pay attention to if we get a move like this, but for me, I trade the structure that is formed directly afterwards. I think we took this in the end. I'm just going to get rid of that so it's a little bit clearer to see. I think we took this in the end. Let's get rid of those stupid lines. Okay, I'm just going to hide my daily ranges as well so it's easier. Okay, whilst that zone has caused a reaction, it's not an area I'll specifically be looking for a reversal from. Okay, because it's an old zone, it's a daily old zone, and it's not something that I personally will trade like that. What I'd rather do is see it as an area which something could happen, okay, and rather than expecting a reversal, I'm just going to trade whatever happens next. A lot of people will see these zones and they'll just place a trade as soon as liquidity swept, and then you have a breakdown. For me, that wasn't what I was looking for. I've had to wait for new structure to be formed, new raids to be had, and new breakdowns to occur with imbalances left behind. So for me, that's the only reason I placed these trades, because the structure here was valid based upon my trading plan. I wasn't expecting a reversal, but because of various factors, such as we've had that liquidity sweep, we've had this really kind of impulsive leg up for, what's that? Was that a couple of weeks we've been moving this way, Jake? I think it is, isn't it? When does that take us to? 4th of November? Yeah, I think it is. Yeah, a couple of weeks.
2 weeks.
So we've been pushing up quite well now for a couple of weeks. It makes sense for rebalancing. You've got all these imbalances down here. You've got demands here. You've got demand here. It makes sense for rebalancing, but this could also be a reaccumulation, and we could just very simply now do this, okay? Our job as traders is to trade what we see and react to the market, not to predict the marketplace and expect it. The best thing for you to do as a mindset point of view is to look at what you can see on the charts, trade what you can actually see, rather than trading what you think might happen, which is why I've started reducing the amount of risk entries that I take these days. My risk entries just aren't really working out at the moment. It's something I need to do a bit more testing on, but my risk entries just keep failing over and over. So I'm just taking kind of clean confirmation entries. Me and Jake were discussing this on Friday. We both had a tough couple of weeks. There's not been much profits flying about. We both made some profits because our systems, our trading plans will always look after us, but it's not been the fun we normally have, is it, Jake?
No, it's been a little bit up and down.
Yeah.
The last couple of weeks it's been difficult. It has been more difficult, definitely, compared to the previous 2-3 months when it was very obvious what price was going to do all the time. Yeah. Compared to now when someone just said earlier about how it starts to rebalance, and that's when people start to lose a lot of money because they end up forcing trades because they feel like they need to get involved. They need to be involved instead of just letting price do its thing and showing what it actually wants to do, rather than they try and make it happen, and it'll never work like that.
Yeah, no, absolutely. So I'm going to talk you through this evening a couple of things on how to kind of maximize trade opportunities. This is something that can work quite well. It can help you out. It is better when market conditions are better. It doesn't work as well in these kind of ranging conditions, but you can catch them. I caught a really good one earlier in the week, and I'm going to talk you through that. Before I move on, this is the trade I took on Euro USD on Friday. My bias was bearish mainly because of this breaker structure. The news pushed us up here. We then had a push down. All the other factors included, as I said, we're in an area where I would be looking for, a rebalancing of price down here. We're also very clearly in premium of the range. I don't need to put the rangefinder on there. You can very see that we're in the premium of the range, so shorts are what we'd be looking for. I wouldn't be looking for longs from here because of the position in the marketplace, unless we did get something really, really clear, as in a new range formed like that. Okay, and then a correction down to that. That would then give us the new range like this to trade from, and then we could look at longs. But until that happens, until we get a break of this high here, I wouldn't be looking for longs on this pair. Anyone got any questions for me on this kind of Euro USD trade before we move on?
I've got something I'd like to add, though.
Yeah.
Can I draw on your chart? Is that possible?
You might be able to. Have a go.
Does anyone know how to do this?
Couldn't tell you. Got a couple more people. Do you know what, Jake? We're up to 8 people. I think that does include us. Check us out. Neo's in. Neo, welcome, Neo. Benson's in.
Huge.
Yes, 8 people. We're growing.
We're making moves onto the upside here. Okay. I don't think I can do it, but
you tell me and I'll try and draw it for you.
Yeah, so if you just zoom out a little bit, that's it. Yeah. So like Czech says, we're very, very bullish, right? And Czech's a very, very experienced trader, and for for a lot of people that are in the group, obviously I know there's only 8 people, 6 including me and Czech. Czech's able to catch these shorts, even though we are very bullish, right? The way that someone who is very new should be looking at this market, they should be waiting for a new bullish range to show itself, because this sort of price action can be very, very tricky for someone who's new to trade, because it's very, very bullish, but there are bearish internal ranges forming. But what could be easier is if you draw another breakdown in price.
Where to? Here?
Yeah, or not even to there. Let's say it doesn't even come down to that hourly range, but let's just say it comes just a little bit lower than that one that you've just drawn.
Yeah.
And then comes up again and forms a bullish range.
Like this?
That.
Yeah.
Yeah, that's it. Yeah, and now the more probable scenario would be for it to come down to a demand zone, or even if it doesn't come to that demand zone, it just starts to come down, trickling down, and then it breaks structure to the upside, knowing that Euro USD right now is bullish. with its breakup structures on the daily, as you saw a few minutes ago, then when the lower time frames like the hourly or the 30-minute, the 2-hour or whatever, when they start to form new bullish ranges, that's when the hourly and the daily are then in sync, and you're more likely to create a more probable trade for yourself rather than getting into the sells. Check sells are fantastic, but he's been trading for some of you guys, you've only been trading for maybe a month, 2 months. To trying to get into these sells, you're gonna get liquidated. You're gonna get tricked by all this internal structure. It's there to fool you. For your more experienced traders, they can trade price down to a demand zone and then up from the demand zone, or up to a supply zone and then down from this supply zone to then carry on the higher time frame narrative. If you want to try and get into these sells, then you are going to find less probability. 100%.
Yeah,
100%,
definitely. It's trading. It's a counter trend play, as you can very clearly see here. Jake makes a perfect point that the safer trade is to wait for the buy and to look at something else that maybe is in the in line with the higher time frame trends. Just to kind of expand on what Jake's saying there, the only valid trade on this pair really was this sell on Friday, and it took a whole week. We were watching it. I think we were talking about it all week, weren't we, Jake? We were watching it all week, and every other trade that looked like it could have worked failed. So if we track back to, where's this, Tuesday, okay, Monday, if you'd taken, so that's a breakdown look, okay, and this kind of illustrates what Jake means there, is that we are in an uptrend, okay, and what too many of us try and do is catch the reversal all the time. For a reversal to happen, you have to have loads of price action. So this may be a reversal, but look at how much has had to happen before we've actually got, what looks like it might be a good trade, and it may still just push up here. It may fail here. I've taken I take most of my profit there. I've got another profit there to be taken, but it may still just push up now, okay? But let's say you tried to get on this earlier in the week, expecting that we're going to have this kind of push down. This would be probably the first trade that you would take. Let's just draw it out. Okay, imbalance there. Okay, take a short from there. Why does this thing never work? Take a short from there, stop above the protected high. You might, if you were really lucky, but probably not, have gotten 2R out. So I always take 2R out, but you wouldn't have got your liquidity target. So let's say you were holding for liquidity target, you've lost that first trade. There's nothing else on Monday, okay? Tuesday, you've had this huge impulsive move up, huge impulsive move down, and you think to yourself, right, we've had the breaker structure, let's draw in our imbalance like that. We place our entry here, and we place our stop above the protected high. Again, you're going for 2R for your first trade, and boom, you've been liquidated, okay? Wednesday, we start off pushing higher, even if you then change your bias, and this is why these zones often, they will trick you out over and over again. So here, you see this imbalance, and you're like, right, I'm going to trade this imbalance. We're now back in line with the higher time frame trend. The reason why this trade hasn't worked out as well as we would have liked, let's say you were going for that liquidity high, you would have got your 2R out, okay, but you would have been then stopped out quite quickly. The reason why, this is exactly what I was saying earlier, why I wouldn't be trading any longs here is because we're in premium. And in premium pricing, okay, it's the wrong time to be looking for further buys. You need new structure to be formed to then give us a buy from here, so from a new range where price can then come back into discount. Okay, right now we're in premium, so longs aren't valid and shorts aren't yet valid. So let's go back. So far we've had 2 losses and 1 2R trade, so you're at break even for the week. The first trade that I saw as valid on EU, okay, was this one here. We got first profits out, and I've held it over the weekend because I'm expecting what normally happens on Friday is whatever happens at the end of Friday, Monday will usually continue. It's very rare for Monday to give you a reversal. It does happen, but it's very rare. What normally happens is the trend on Friday afternoon will continue all the way through Monday. So that's kind of what I'm expecting. But as you can see, you'd have taken a couple of setups here. So it's important to note where price is on higher time frames and what we should be expecting, okay? Jake and I, if we're looking at where price is now, we're not looking for longs here, and we need a lot of setup to happen before we're looking for shorts. These first two were technically valid trades, but as you can see, they failed. And if I'm looking at a larger reversal like that, I want to see, first and foremost, a larger breaker structure. Okay, that's the first thing I want to see. That is not what I would class as a larger breaker structure. The reason for that is this move here didn't create any new highs. If that had done that and then that would have been valid, okay? But it didn't. This is the first time that we've actually had price give us a swing high and then a breakdown, okay? Once that's happened, I can now start looking for shorts, and we didn't get a short until Friday. So how many of you have watched the 2 videos that I did on the 3-2 technique so far? Not a problem if you haven't, I'm just wondering. Anybody?
Come on, people. He's dishing this content out for you, and nobody's watching it. Come on.
Yeah, I've watched it, but I need to watch it again.
Say again?
The second one, I haven't.
Second one. Okay, watch the second one because I talk through this in a bit more detail. So this is exactly what I talk about in the second video, is when you're looking at a higher time frame structure, i.e. we're in a bullish uptrend on the 4 hour, the daily, whatever you want to look at, okay? We can see, and this is a good kind of filtering process, if you start at the weekly chart, okay, this is a weekly breaker structure, okay? So you want to be looking at now higher time frame breaks, and that might be the daily, the 4 hour, the 2 hourly, whatever you want to look at, the 1 hour, okay? Because our trend, our structure is bullish on like the daily and the 4 hour chart, so our higher time frames, in order for us to validate a counter trend move, we need a higher time frame breaker structure, okay? And it doesn't actually look like we got that until the 1 hour, okay? Which is why if we'd had a breaker structure and a close of structure below on the 4 hour time frame, this would be a fantastic setup now. We've only actually had it on the 1 hour, which means we're waiting for more confirmation. This is a 1 hour breaker structure, okay? It's enough for us to enter a short position, but there's no guarantee when it's going to come down. If, however, we had a push down like this and we broke a 4 hour structure, like I'm hoping we'll do on Monday, that for us now is confirmation of a bearish trend for at least the short term. And equally, if you want the daily structure to be broken, so if you're breaking one of these lows here, then you can confirm that we might move down for a little bit further. So the time frame that your structures are broken on will make a big difference to the validity of your trades. Does that make sense? The higher the time frame that your structure gets broken on, the more reliable that move is. And that's what I talk about in those 3-2 technique videos, is that a lot of people will just wait for now. They'll wait for any, because price is so high and what a lot of people class as overextended, what they'll now do is they'll wait for any kind of breaker structure like we spoke about here. And that's another one there, look, okay? They'll wait for any kind of breaker structure and expect to get a move and get stopped out. And that's what the 3-2 technique will teach you, is it will teach you a way of ensuring you're not getting into trades too early. There were lots of low time frame valid setups on this price action last week. But as you can see, it took until we had this major breaker structure here, which was on the 1 hour time frame, and then another 2 days. Yeah, another 2 days after that, in order for us to get into a what I would class as a valid trade. You kind of have one there, and you might have got 2 hour out of it, but for me, I don't trade overnight, so that's outside of my trading window. How many of you trade time zones and what ICT calls kill zones? How many of you trade kind of sessions, or do you just take trades whenever?
I tried with session, but I found like there is so many good trade out of the kill zone area.
Do you? Okay. So I think that's really important. As a trader, you've got to find what works for you. Personally, for me, I like to trade 2 specific time zones. I like to trade the London Open, which is this kind of move here. This is from 8 a.m. to about 10 a.m. my time, okay, which is UK time. And I like to trade the the New York session, which is here. That's, as you can see, often where we'll get reversals in the marketplace, or often continuations. So those are my kind of two trading zones. This trade, I think I took a limit order. My only exception to that rule is limit orders, okay? If I see a valid kind of medium time frame entry like this, you can see what I was tagged into at 3 a.m. That's my only exception to my rule, is if I've got like a 15-minute or 30-minute setup, and it's a really valid setup like this where we've got kind of a big move down, retest, etc. I'll set a limit order, but I don't take any market orders outside of my my trading time zones. Right, anyway, I'm going to talk you through a couple of things tonight regarding kind of maximizing your trade potential. I've got a good example of a trade I took on Euro Aussie this week. Again, before I move on, guys, any questions for me on what we've just been discussing?
Yeah, Chuck, I got a question. So,
go for it.
You just mentioned that on this really bullish move, was still in premium, we broke a weekly high, right, or weekly structure.
Yes.
In your experience, what I've read, right, is usually when you break weekly structure, you can expect a pullback, right? That's kind of like what I've seen. Is that really the case, or like do you just have to really wait for it because it can actually just continue up?
I can answer that.
Yeah, go for it.
So when when you say expect a pullback, that's probably the worst thing that you can do. There could be absolutely no time that a market. So I mean, let's just look at Check's chart here. Check, if you go back about 8 candles, those two big. No, just go back to where you were. So let's just say. Oh God, it's really hard to do it without. If you just go back about 3 structure points.
Up to here?
No. Just go back to where you were.
Yeah.
So go, put your cursor on the low.
Yeah.
And then go back up to the high. And then the low again, then the high, then the low again, then the high. Okay, so from there we broke a weekly low. From
this one here.
There, we broke a weekly low.
Yeah.
And then from then we just carried on dumping, and there was no pullback in there at all. Not a pullback for possibly maybe even the whole week.
2 months.
I don't know.
2 months.
Yeah. No, that's a weekly, isn't it? So. Oh yeah.
Yeah. So a couple of months. Yeah.
So literally for about 3 weeks we just kept dumping. And there was absolutely no pullback. So if you waited on a weekly chart, then you could have been waiting forever. But if you go then down to the hourly, you're going to find minor pullbacks in that chart that you're going to be able to get in, because you're going to find the hourly ranges that are being formed. So you find a low, then that low forms a high, then that high breaks structure, then it may come up to the supply zone, but if it doesn't, then you can get in on the newer range that's formed. There's no such thing as waiting for the best pullback, because sometimes a pullback just doesn't happen. It can literally with a news event, and then price can just carry on because it's taking liquidity from all the lows around it. It can just keep on going and keep on going, and then when it does pull back, that's giving you your real optimum entry. But to expect a pullback, that's you could be waiting for absolute ever.
Yeah, you could be. I think candle closes are important to keep an eye on as well. The weekly chart is always worth checking for a couple of things. So let's say this candle here, okay, had broken and closed above this high. What we could be looking at is a continuation of the weekly up move, very similar to this one here. Okay, this is a perfect example actually. Okay, so let's get rid of these two here. Let's just zoom in onto this chart. So price here, this candle, this big weekly candle here, massive impulsive candle, as you can see, it broke and closed above this previous weekly high. Now, based upon that logic, what you would expect is that because this has had a big weekly close above, we would expect another push higher. But as you can see, price didn't do that. It's just consolidated, okay? What's important to note is that anything really could happen, and whilst you may expect this continue to higher, you want to be looking at structure on the lower time frame to confirm those moves. And as we discussed earlier, as we saw on the weekly charts, we didn't get any structure that told us we were going to go higher, okay? If, as we discussed earlier again, we had this big push up and then a pullback, then we could have expected a move higher, but we didn't get that. So what you're saying is, yeah, these things that happen, they can indicate what is going to happen next, but you have to expect that anything may happen. For example, my expectation now is price has wicked above this liquidity high. It's taken liquidity, it's been swept, and it's come back in and closed within. My expectation is that price is now going to move back down. However, I'll wait for structures to develop to tell me that. And if you look here, we have actually dipped into this supply zone here. We can't ignore the fact that although we have changed structure, price is very heavily bearish and has been since May, okay, of last year. So, you know, there's pressure on both sides. We've broken bullish, which would indicate that the current structure is now bullish, but we've also got this massive bearish move, and it's very rare that price will just do that, isn't it? It's not often going to do that and then that. Look at this reversal here. So we've been moving up since April 2020. We got up here, and then it took like, what's that, January to July. It took 6 months for the reversal to actually happen. So these, you know, the charts move a lot slower than we expect, and it's the expectations that sometimes get us caught up. We're okay to have a bias in terms of what we are expecting might happen, but it's important to note that anything could happen always. So whilst I'm expecting a push down, if I all of a sudden get a massive push up and then a retest, I'm still going to be buying, even though I'm wanting it to move down ideally. So it really does vary. This could be just a hesitation to move higher. This could also be the setup before we get one of these moves. You know, one of these, what's that pattern called? I don't know what it's called. What do they call it? Hanging man?
Fuck knows.
Don't know. But there's that classic 3-bar reversal pattern, isn't it? One of them basically. One of them. That's what I'm kind of expecting, but we might not get it. So it's important to be ready, like Jake said, be ready for anything and everything. Closes are important to note. For example, here, okay, we had this push down, we had 2 wicks, and then ultimately we had a push up. So, you know, price was struggling to break and close below that. That could indicate you're going to push higher, but we had a small push up, and then you had the ultimate big push down. So it's you got to be on your toes. That's the long and short of it. You've got to be on your toes. You've got to be expecting anything to happen, and you've got to be stacking confluences. For example, for me, I've seen this wick. We've broken structure. We've tagged into supply. I'm expecting a further push down. We've had these kind of couple of breakdowns. We've had, you know, break a structure there, and I got into a nice trade. For me, I'm expecting a push down. If price all of a sudden reverses on me and does that, I'm not then going to be automatically selling from there. I'm going to be sitting on my hands and waiting for something to happen. If I break that structure all high, then to me to go short, I need that to happen, okay? Equally, if I'm looking for longs, for me to go long, I need something like, a major break, maybe a couple of break points, and then I need a retest, and then I might be looking for a long up here. But it's, you know, patience is really key, isn't it? It's so important to wait for the most obvious of trades. And, you know, I was having a chat with Jake earlier this week. I took some poor trades because I wasn't making my profit targets. I stayed in profit just there or thereabouts. Had a couple of good days, a couple of bad days, but it's important to be patient in this game, and everybody, doesn't matter how skilled you are, how long you've been doing this, you will get impatient, you will get greedy. It's just one of those things that comes with it. I think you need 5 to 10 years worth of trading experience before you are an absolute master at it, and you trust your setups and you trust your system absolutely implicitly and don't trade anything else. It takes a lot of discipline, and we all, Jake and I included, we all make mistakes from time to time. The important thing to note is that you will gradually get better and better. So whereas 12 to 24 months ago I was blowing accounts and failing challenges. Now my bad weeks are I only make 0.5%, or I only make 1%, or I don't make any money, or I lose a little bit of money. I don't ever get close now to blowing challenges or blowing accounts. So it's a gradual kind of learning process. You'll gradually get better and better. Right.
That stems just from what you just said when you said about sticking to your system. When you have formulated a system for yourself, you know for a fact that that system works over time, and if you only ever trade that system, no matter what, that eventually, okay, you might have a losing week, you might have 2 losing weeks, you might even have a losing month where you lose, let's just say you lose 5% in a month, but the next month you could make 15%. You just got to keep trading your plan, and it's human nature to, oh, I lost, so I need to bet more to win my money back, and that is the worst possible thing you can do. You need to keep betting the exact same amount and keep following the exact same entry, the exact same structure, the exact same everything, like a robot, and eventually it will come good. Because if it doesn't come good, one, you haven't tested your system to prove whether it comes good, but if it doesn't come good, then your system doesn't work, and you need to go back and work on that more so to actually make it work. Like you need to find out what's going on and what's going wrong in your system that's actually causing you to lose. Because if you are following the exact same thing every single time and you're losing, your system is wrong. If you're following the exact same thing and you're winning overall, bear in mind this isn't a day-to-day basis, everyone. This is not an hour by hour, or a day by day, or even a week by week. This is a year by year and a month by month. Like some months you might lose, but the next month you might win, and then you might win the next month, and then the next month, and then you might lose a little bit. But it's all about winning more than you lose when you do win.
Yeah, absolutely. The market adds in enough of its own variables. I always talk about, if you trade your plan and you trade your system, if, like Jake says, your system constantly means that you lose, you know that you need to change the system. If you keep changing the way you trade and you don't follow your plan, and you take this entry and you try out this new strategy and you are all over the place, you're adding in additional variables to something that is already so varied. The market is so random. You've got news events, you've got just random, sometimes I'll put in the chat, anyone know what price moved like that? The stuff that happened with the Ukraine the other week, when Russia missed Ukraine and hit Poland by accident, or whatever, whatever the fuck happened.
Random.
Yeah,
so random.
Whatever happened, but
who can predict that? That happens in the space of what, 15 minutes?
Yeah, absolutely. Luckily, I caught it on the right side, but I was sat there scratching my head, being like, what's happened? There's no news. It's like 7 o'clock in the evening. So there's already so many variables in the marketplace that if you add in extra variables, i.e. you trade differently every single time that you take a trade, or you don't follow a strategy, you don't know where you're going right or wrong. That's why it's so important, and Jake and I will always bang on about making sure you have a plan, making sure you have a trading strategy, making sure you have your rules written down, making sure that you're doing your back testing, making sure you're doing your journaling. This stuff is boring as fuck. I'm going to be honest with you. It's so fucking boring. Jake and I don't like sitting at our computers for hours on our own, watching fucking back testing trades. It's boring. But it's what's necessary. Just like if you go to the gym and you train regularly, you have to do your stretching and your mobility work, otherwise you get injured. It's the same principle. Anything that you do, if you run a business, some of you I'm sure have run a business or had a hand in running a business in the past, you have to do your accounts, you have to do your taxes, you have to do your paperwork. Nobody likes doing that shit, but you can't run a business without doing your paperwork and your taxes and your invoicing and all of that bollocks, okay? It's part of the process. Get used to it. Any one of you that's either sitting here this evening, thank you for joining us, or that's listening to this on the recording, who's not journaling, not back testing, not doing the admin side of trading, trust me when I tell you this, you are not going to get anywhere doing what you are currently doing. If you're winning trades, you're being lucky. If you're losing trades, I'm not surprised, because you have to put the work in order to get the results. And Jake and I have done exactly what you guys have done, where we sat there in our early days and been like, fuck that shit, I don't need to do that. Don't worry about that. It's not a problem. I'm fine. I know my strategy.
Yeah. I'm moving to the next strategy because this one don't work.
Exactly, yeah. I'm moving to the next strategy. This one don't work. There's a reason why it doesn't work, because you're not testing it, okay? Remember, this is the big leagues, guys. This is multi-million dollars per year you will be earning eventually. This isn't something that's going to be handed to you on an Instagram reel, or after watching a 15-minute YouTube video. It takes hours and days and months and years of practice. So the sooner you understand that, really, the better. Now, I'm conscious that we're running out of time. I'm going to spend just a couple of minutes on this topic, and then I'm going to hand you over to Jake, who's going to talk us through some trades, if you've got some ready, Jake.
Yeah, I'll get them ready now.
Okay, so as we can see here, took this really nice trade on Euro Aussie last week. Ended up in about 6R, okay? Not week before last. Okay, ended up about 6R, okay? It's really important to be patient in this game, okay? This was outside of a trading window anyway, and you can see here that the initial push down didn't really give us a setup. There's an imbalance here. It didn't come to test it, and we had this other push down. Now, when price is moving like this, okay, you've got to be quick on your toes. As you can see, we caught this imbalanced trade with stop above the protected high, and it turned out to be really nice. But when price is moving quickly like this, you've got to be quick, and you've got to expect if there's another breakdown that we might only get back to retest here. What I want to talk to you about today is kind of how to maximize your wins. Now, this works better in more impulsive markets when price is impulsing rather than correcting like we were doing last week. So if we get some nice pushes down this week, then this may be something you can use. Far too many of us place full risk on a trade before we've got confirmation that the trade is going in a direction. Now, what I promote if you're newer is higher time frame moves. So like the 5-minute charts, the 3-minute charts is the very lowest. I wouldn't recommend going down to the 1-minute charts until you're passing funded challenges and things like that, because it is slightly more advanced and it does take a lot more work. If you are going to be trading the 1-minute charts, you need to have hours and hours of practice, journaling, backtesting behind you, before you can move forward with this confidently. Now, if you take a trade and you put your full risk on there, if that trade fails, you lose your full risk. What I quite like doing when price is moving well is, or in market conditions that I'm not 100% sure on, is placing half a trade and adding into it. Yes, I'll lose a little bit of R, but adding into it when we get confirmation. What I mean by this is this. This is our first entry off the imbalance, and as you can see, it's starting moving really, really well. Now, if this trade had failed, I would have lost half R, or let's say I'm trading at 1% per trade, I would have lost 0.5%, okay? What can happen is when we get these kind of engulfing candles here pushing down, what we can then look at doing is adding in a second trade, okay? On a very low time frame, this would have been a new breaker structure, as you can see. Let me just move this to the left. Let's just say that's in. I'm going to move that like that, okay? What we can see now is that now we've had this push down and we've had these two kind of big impulsive candles down. The assumption is that we are going to continue. And the stops on these, 21 and 20, the stops on these are very, very similar. I'm going to lose probably 1R because I'm getting in lower. Yep, so I'm losing literally 1R because I'm getting in lower. But how much safer now is that trade? Okay, and this is a really good way of maximizing your wins and reducing your losses. What you can then do is, if you get then another breakdown in structure, like here, we've got this fresh imbalance, this is a perfectly valid trade. What we can then do is we can then start scaling into these trades off these further additional entries. Okay, and this is how, what a lot of people do when they try and maximize their entries is they will add, look, you'll see it on Instagram all the time, they add like 19 positions in all at this point, okay? Some of the best traders that I know, what they'll do is they will keep adding in after they've got further confirmations, and a good way of doing that is engulfing candles in your direction, fresh breaks of structure. So if you're the person, if you're a trader which is currently struggling with their own system or constantly getting losses, try this out, okay? Wait for your setups to occur, take half an entry. After price starts moving your direction, take another entry, okay, with the new high. What you could also do, let's say you're not just adding in positions, let's say it just keeps moving down and down and down. There's nothing wrong with taking a trade like this, okay? yes, that stop is twice the size of that stop, but if your ultimate target is down here, there's nothing wrong with that. Now what happens is that ends up at 6R, this ends up at 2R, so that's like a third of what that trade is. However, you're in a confirmed trade with extra confirmation, and in turn what you end up doing there is you add confidence to your trading and that price is going to move down. Now, reason why this didn't really work out for me last week is because what price has been doing all week is kind of that. So it didn't really work for me, and that's why I had a worse week than I should have, because I was adding into my trades and they kept reversing on me. So I'd win on this one, I'd lose on that one, ended up at kind of break even or just half an hour up. But it's a really good way for you guys to kind of start scaling into trades, and we'll talk more about that. I'll post some more entries on that. Any questions before I kind of move on from there? I might do a whole video on this for us, because I feel like it deserves a full video. But you know, start looking for confirmations. There's nothing wrong with taking half a trade here, and then when you get the breakdown, taking a second trade like this. Okay, now you've got the confirmation. You're now in a full risk, and it will mean that your losers become half the size they were, and your winners become twice the size they are. Okay, it's a good way of maximizing winners and reducing losses. Anyway, I'm going to pass you over to Jake now. Jake, I'm going to stop sharing my screen if I can do that. How do I do that? There it is. Stop presenting. You should be able to just go, bud.
Right, let me know if everyone can see.
Yeah, all good.
Yeah.
Yeah, perfect.
Yep. Right. So I'm only going to show you one trade because the rest of them were sort of just break evens and little losers. But if we can just ignore this weekly zone for a second, we are moving up, and we were really, really bullish, and we were bullish from this break here. So we had this big impulsive move upwards, and I know overall we are very, very bearish, but this is what I was saying about you know, following structure on your higher time frames. I was expecting price to come up to this sort of zone here, but it didn't in the end. So I was sort of trading into this daily zone. It didn't quite make it, unfortunately, but we came to mitigate this weekly. But at the time, I didn't have this weekly marked up. I was looking at the daily and the 4 hour and the 30-minute, etc. So going down in price, obviously we're still really bullish. All we're doing is just making tiny retracements and big impulsive moves upwards. So all the time that we're making impulsive move upwards, I'm not going to try and look for sells, because why am I going to try and fight all of this bullish price action and try and catch the reversal down? The chance of it is just so slim, and I used to do it all the fucking time, and it's just pointless. But before I show you the trade, like, now that you can see, we've had that big impulsive move, we've had that pullback, and then we've had that move again, but now we've pulled back. Now we've broken structure. Now you are valid to look for shorts. And all that took was, okay, it took a whole week of price action. But if you were trying to look for shorts from a higher time frame point of view, and you had this weekly marked up, you wouldn't be trying to take a short from a weekly zone and trying to catch the high here. It just wouldn't work. Okay, not that it wouldn't work, but the chance of it working are like 5%, maybe even less. No one wants a win rate of 5%. 25% and upwards is okay. It's bearable. But anyway, all we have is bullishness, right? So my trade was caught somewhere in here. Where do we think it's caught from? Does anyone think it's going to be caught from this candle? No? From this candle?
Can you repeat
No.
the question, Jake? I didn't understand. What was the question?
Where do people think I caught my longs from? So bear in mind, we are very bullish. do people think I caught my trade from like this huge candle here, or somewhere around here?
Should be in this area.
Yeah.
I'd say
Just-
probably the retest of the lower block.
Yeah. So I mean, so when this high is formed, we're on a 4-hour chart right now, but let's just go down to the time frames. We're like, I don't know if people are trading on the 4-hour, but if you are trading on the 4-hour, that's fine. There's no real break of structure here, but as soon as you get that break of structure above that high there, above there, then you can start to look for longs from here, being cognizant of where you are in the higher time frame. But let's just look at this current price action. Then you could actually look for longs from there. That's completely valid, and you would have potentially caught, maybe like 3-4 hour out of that. I'm not entirely sure. Yeah, like just under 4, that's fine. That's a good trade. But I don't trade on the 4-hour. I don't trade on the 1-hour. What I do is I stack all my time frames. I have all my time frames down here. Bearing in mind this is updated after what's happened here. But at the time it was daily bullish, 4-hour bullish, 1-hour bullish, and then the 30-minute at this point here. Just replay this. 30-minute was bearish because we have this sort of price action showing us here. Sorry, the lines are all squiggly because it's I don't actually know. But then you have that breakdown, right? Now a lot of people would try and get in there, and that's fine. It actually worked out. It's a good trade. But if the daily is bullish, the 4 hours bullish, the 1 hour's bullish, and then it's only the 30 minutes that's shifted bearish, that's not going to be your most valid trade, is it? Right? The more valid thing would be for wait to price to do this, maybe do this, like what I was saying, then shift bullish and then get in at some zone here and look for your entry here. Because even though it may not have mitigated anything significant, just because there's some demand zone down there that you're expecting price to get into, there's much more chance of price continuing from anywhere and then actually just continuing the major trend rather than actually coming into a zone down here. There's much more chance of a continuation than there is a pullback. The pullbacks are great because when you do get in, you're going to get in at potentially the last possible point before price is actually going to continue on its major trend, right? But getting in on these lower time frame or medium time frame shifts in structure is still perfectly valid as well, because at the end of the day, if every other time frame is telling you bullish and then you get a shift of structure bullish on your medium time frame, then why not confirm that zone? It doesn't make sense for price to shift bullish and then continue bearish if every other time frame is bullish. You have to be very, very cognizant of every other time frame. You can't just trade one time frame because it shifts around crazy amounts. You just can't do it unless you are just going to trade the daily and stuff like that. Then you can just trade that one time frame and you can enter on that one time frame, but you still need to be aware of the higher time frames, right?
Jake, I have a question though. When you go down to the 30, like, do you just take one break of structure as shift to bullish, or do you wait for 2 within that same time frame?
No. So if every other time frame is stacking up how alongside the 30, then I'm happy to use that one break of structure, because then it's carrying on with the higher time frame narrative. So if the daily let me just draw this out. So if the daily is like this, obviously we know price doesn't move like this, but let's just for example say that it does. If the daily is like this and then I'll do a different color, and then the 4 hour is like, and then the 4 hour is like this. Absolutely horrendous drawings. I do apologize. And then the 30-minute we'll just do from this leg here. If the 30-minute is like this, oh dear. And then we see a shift down, right? I'm not gonna look to get in at these zones here. I'm gonna look to just follow it down, and then say we have a 4 hour demand here, but it doesn't get there. But and then we see another push up like that. So then you've got the daily telling you bullish, the 4 hour telling you bullish, and okay, it hasn't reached the 4 hour demand, but the 30-minute has then just shifted bullish again. That's my one breaker structure is absolutely fine there. Don't get me wrong, it won't always work. No strategy will work 100% of the time. It will not. But let me just show you let me just show you a 4 hour chart, and we'll just. So here we have this breaker structure and then this breaker structure, right? Everyone happy with that? Or to be fair, you could even just say that one because that was actually the low that was formed after that high. See how prices didn't pull back? If you were waiting for that zone to get hit, you've been waiting all the way up to there. But even then, it still didn't actually hold to the new low. But and then if you then see that as a breaker structure, then on a lower time frame, there would have been a push up. This would be a new bearish trend forming, right? We all agree that's a new bearish trend starting to form?
Yeah.
Yeah. And then that's the low that gets formed up for that high. So this is the new low that created this high. So this is the new structural point. And then as you see that break down, look what happens. It comes into there. So the chance of a continuation is much more likely than the chance of a pullback. I know Check says about being in premium and discount and stuff like that, but this you can translate that to every single time frame, right? So even though this is that whole range there for the 4 hour, if you then just zoom in and you just see this as the 30-minute discount, then the 30-minute range, then we're straight back into check. Is that premium or discount? I don't know.
That's premium. Yeah, so you're back into your premium on that range now.
Yeah. So now you're stacking your 4 hour, which is broken bearish, and then your 30-minute, which is then just broken bearish. So, and you've just come back in and you've just rejected it absolutely perfectly. And if you got in on that, even if you just traded the 30-minute zone and you were cognizant of where you are on a higher time frame, that's somewhere down there, and you were trading into this is a weekly demand. No, this is a week demand, sorry, actually. But even if you were just trading into that, then that's, even if you took multiple partials, that's still 16R, right? And then the exact same thing.
I think the meeting's going to, we got only like 15 seconds left.
What's that?
The meeting's about to end.
Oh, is it?
Seems to be. It's gone over an hour, so it seems to be fine. Is it giving you a warning? Is it, Anand? Mine's okay this side.
It's okay with me. Yeah,
yeah it's fine. Yeah. I think just quick carry on.
Yeah.
But yeah, that's basically what I'm saying. Just with stacking confluences and stuff like that. I've just heard a load of noise. Then no, we're all still good. So if to answer your question in a very roundabout, long way. Oh, that's decent that you can just click on the same link again. You haven't got to start another thing. I will. I'll just run through that last trade quick. Check. Sorry, I thought I went on a bit of a tangent there.
Sorry, I didn't realize I was muted. Mate, crack on.
I'll wait till everyone's back in before I start.
Can I have a quick question before? Yeah.
Sure.
Yeah. Everything is born in a smaller time frame. Let's say 3 minutes, 5 minutes. If I'm going to wait for confirmation from the bigger time frame, is not like late for the party then?
No.
Or
you have
should be reversed. Like I should start. If the bigger time frame saying is bullish, then I should be looking for bullish trade only. Is that what you mean, or?
So you should be if it depends how experienced you are, really. If like Czech did on his Euro USD trade, although every time frame's telling him bullish, he's still cognizant of the fact that if there are bearish range being printed, those bearish ranges can hold, but he's not looking to hold those bearish ranges forever. He knows that overall he's very, very bullish, and he's not going to be holding these bearish trades forever, but he knows that he's day trading and he can get involved on counter trend trades for, you know, a short while to, you know, bank 4R, 2R, even just 1R and stuff like that. You know, he's cognizant of the fact of where he is in every single range at all times. A lot of people, they look at the daily and then they'll go, okay, we're bullish, but they won't look at the weekly, because even if the daily's bullish, the weekly can be so bearish, and the daily has to become bullish to get into a weekly bearish range, right? So if we just used AU for a second, like you can see from this break of structure, we're still really, really bearish, right?
Yep.
And the yearly is bullish from here, which we have just mitigated once, but we haven't actually broken this high that created that low. We came in and mitigated it, but we're on the way back down again. What were you wrong about, Czech?
That's not me. I think someone said we got 15 minutes more.
Oh, right.
But it cut us off like a minute later.
Yeah,
but we can. It's good that we can use the link again, guys. So if it ever gets cut off, just click the link. We'll jump straight back in until we're done.
Yeah.
So
we're still in this weekly bearish range, right? And we're coming to mitigate this weekly supply, but to make that weekly supply happen, we have to turn bullish at some point. We're not just gonna, like Czech said, we're not just gonna come down like this and then like this. Price can't do that, because they have to trick people into, and they have, not only do they have to trick people into trades, but they have to mitigate their positions slowly, because they're trading with trillions. So they can't just move price like that, because otherwise they'd be in, like, you have absolutely no idea how much drawdown that they couldn't physically like do that to themselves. So they have to move up and then mitigate their orders. And when I say mitigate, I mean
retest.
You know, retest and break even on their trades and stuff. So they're moving price up and down they're moving up, they're in drawdown, they're coming down, they're breaking even, they're selling, they're in drawdown, they're moving up, they're breaking even. That's why you see these wicks and these little mini rejections, right? These liquidity grabs. So they're breaking even, then they're moving back down, and they're moving up again. So all the time that they're moving up, they're making profit. And when you see a pullback, it's because they're breaking even on their trades, and they're then selling again. but every time they sell, they go back into drawdown, and then they buy again, and then they come back down, and then they mitigate orders. They have to do it very, very slowly on these higher time frames. So just because you're trading on a higher time frame, it doesn't mean that you're late to the party. It just means that you're going to be using a much bigger stop loss like that. So you'll be using a stop loss of about 125 pips. But if, let's just say we were really, really bullish and we were targeting this high up here, you're still going to get into a 4-hour trade and stuff like that. It's just everything just takes a lot longer. The market is fractal. Everything that you see on the 12-month happens on the monthly, and it happens on the weekly, it happens on the daily, it happens on every single time frame, right down to the 1-second chart. But it just happens a lot quicker on smaller time frames. But obviously there are a lot more false moves and a lot more liquidations and stuff that happen on the lower time frames.
It's worth noting as well, Ali, is that when we, because we're all trying to catch these reversals, that's where we get the best trades, that's where, you know, we get the highest risk to reward. It's worth noting as well is that when price, like as you can see on this chart here, when price has broken structure in the opposite direction, remember the pressure bearish on this chart is still massive. As soon as it breaks structure in the opposite direction, think about what happens to all the traders that are in sell positions. Okay, it often causes a pullback. That's why, and again, if you haven't watched the 3-2 techniques video, that's why these setups work so well, because as you can see on this chart here, when we've had that push up that's broken that daily structure to the left, you can see price has come back down and tested almost to the bottom of the range again. So like Ali, you asked the question earlier, you know, am I too late to the party? Probably not, because we're using the higher time frame breaks of structure to give us an indication that we might be changing direction. And you can see after the break of structure here on Aussie dollar, we then started pushing higher. So then when price comes back into our freshly created demand zone, and the demand zone has been created by the breaker structure, so what's left behind, remember, is the demand zone. When price comes back down to test that, we then drop down to our lower times frames, and then we look for, and you can see Jake's drawn it out there, there's 2 green lines just below that green arrow. Jake's drawn it out there, okay? That's where he was expecting a retest, okay? He didn't get it because prices started moving there. However, in that candle that he's framed just below that green arrow to the left, in that candle, there would have been a lower time frame setup for a buy. Okay, so when price starts moving and pushing higher, okay, yeah, you can see there, okay, it's come back to retest, and you will find setups within these areas. You can see that breaker structure there, imbalance, there'll be an imbalance on a 5-minute, and yeah, that's it, there'll be imbalance there. So the higher time frame breaker structure is our signal to start looking for trades in the opposite direction. We then use our lower time frames, and I can see, Jake, by the looks of it, you actually traded that, didn't you? Traded that
I
up.
didn't trade. No.
Is that not what the arrows mean?
No. That's just this
Market structure.
Market structure.
Ah, okay.
Thing, yeah.
Sorry.
I never delete it. I don't know why. It's just always just on there.
Quite handy, yeah. So you can see there would have been a setup there. So you're not too late to the party. If you get a higher time frame change of structure or break of structure in the opposite direction, that is then a signal for you to start thinking, right, we might be reversing now, and if price comes back down into discount, which it did in this case, look at a setup on the lower time frame. This, Ali, really is exactly how we trade, and I think it'd be really good for you and those of you who haven't to watch those 2 videos that I've released most recently, because they talk about exactly this, how to use multiple time frames to get you into the better trades and to make sure you don't miss them and make sure you're not too late to the party.
And even if you do feel like you're late to the party, like say you didn't get in and you just saw price do this, that's okay. Like there are going to be so many more setups exactly like this, because look, even say you missed this entry down here, but then you have another breaker structure. Price, like I said, it doesn't always have to pull back. It can just continue, and then it doesn't pull back. You get this further breakdown, which is an intermediate breaker structure, which would trick people who are trying to trade off of this range, even though this range is now irrelevant because the higher time frame is telling you bullish, and then you have a further break bullish, and then you have this breaker structure up. Okay, you might,
Bigger drawdown probably then. No?
yeah, you'd see that there, and let's just say you just went right under the protected low about there, and then you're trying to trade that to where that new range is formed. So that's still a perfectly valid trade. You just go break even as soon as you have a breaker structure, and then it hits your profit, or you just target this high, or anywhere. You just have to when you test, you'll find these ranges, and you'll be like, oh, I need to target that point, and you're just going to consistently try and target a certain point, and that's always going to be, or a certain RR. It doesn't matter what way you go about it. You could just say, I'm just always going to target 4R, and then every single time you get into a trade, you just target 4R. That's it. That's not personally how I trade. I trade in ranges. So that's all I do. But I'm getting in on a 1 minute chart, so I target a 30-minute range from a 1 minute entry. And I'll show you exactly what I mean by that with this trade. So like I said, ignore this here, but every other time frame from the daily down is bullish. I know that the weekly, the monthly is bearish, and the yearly is bullish, but we haven't actually broken any monthly or weekly structure yet. So I'm still happy with the higher time frames being bearish, but the daily being bullish. So bearing in mind we're day trading, we are looking for bullish plays from this point. So let me just put the trade on. So this is what I was looking at, and this was on Monday. And I woke up sort of around this sort of time, and we have this internal bearish range forming, and then I saw this candle. That's not good enough for me. And then this candle, that's good enough for me. I'm happy for that. That's a clean break. Now I've got this demand zone, and I've refined it. It was down to the 20. So there you go. It's actually a little bit more clear on that chart. So there we go. And then price did its thing. It came in. Now I'm going to go down to the 1 minute, and I know Check tells you not to, and I'm agreeing with him completely. But I've been trading for about the same amount of time as Check, so listen to him when it comes to entry. But when I said that everything that happens in this market is fractal, that means that what's happening on my 1 minute time frame is happening on the 5 minute time frame, but it just takes longer. Okay, so just because I'm shown what I see on the 1 minute, think about what I'm seeing on the 1 minute as the same thing that happens on the 5 minute or the 10 minute. Okay, so as you can see, I've got my structure points here, and I didn't get in on this entry because I was working. I missed it. Good thing I missed it, because I would have actually been stopped out anyway, but doesn't matter. And then as price just comes deeper into that zone, you see, price is starting to slow down pretty drastically, isn't it? And then it broke that again. I missed it. I was working. I got quite lucky with this trade, to be honest. Okay, and then we had that this low was broken by this candle, so this high is now the new high that's formed from this low. So now this is the new structural break, right? And then again, I missed this entry because I was working. Unfortunately, I was fitting a kitchen at this point, so I had my hands full quite a lot of the day, but my phone was always there. I just couldn't actually physically get to it. It was quite a stressful time. But I would have got in at this point here with the imbalance. Exactly the same thing that Check says. You have a breaker structure, you have imbalance, and then you're just looking for the last point for price to come to before carrying on, right? So I would have got in there. I'm not going to show you what the trade would have been, but annoyingly, I would have passed my phase 1 of my challenge with one trade, but I didn't. And then we had another further break up, and I got in around it was around here. TradingView just seems to move it around a lot when you go on replay tool. But yeah, it was around there, and then price just sort of did its thing. And the only reason the reason I got into this trade was purely just because of a structural break. You see a structural break, and then you see another structural break, and then price just did its thing. And then from that point, all I'm seeing is if we are to continue bullish, this is the high that was created that made this pullback, right? Now I could have targeted here, but I know overall we are very, very bullish. So I was completely happy to target the high. And I'm pretty sure I remember messaging into the group saying, oh, I was like 2 pips off, and then I was like 0.5 pips off. And at the point my girlfriend was like, why don't you just take the partial now? I was like, but that's not my rules. My rules are I take a partial when it hits a certain point. If it was to come here right up to where it did there and then just go like that, so be it. It was a break even. That's my rules. I've traded it. I've sent this back test sheet into the group chat many times now, and like that is a strict rule that I've
log
followed.
this manually, or like if there's any software we can utilize that?
No, this is all logged manually. This is what Check says, that like we spend hours going through back tested trades, exactly like how I just did there. That's exactly how I back test. So I do it bar by bar, and I'm always skipping through time frames because I'm not just looking at the 30-minute structure all the time. I'm looking at the 25, the 20. I won't go lower than 10 for my structural breaks, right? I'll go to the 20, the 25, and the 30, and higher as well. Obviously, this works on the hourly, but if I go to the 20, this then doesn't look like a real structural break. It just looks like a wick, right? So this is when you're using the lower time frames to sync up with your higher time frames to then get involved in trades. It's not. This is what I just put there. So I put overall price is very bullish here with the daily 4 hour, 1 hour and 30-minute all bullish. Then we had I had a look on the 15-minute. We had a 15-minute break bullish. I'm happy to look to confirm that new zone. So when you even if you're not live trading, even if you're just watching price live and you're back testing a system live, which is absolutely fine. It just takes a very long time to obviously back test your system if you do it that way. We're lucky that we have technology like this now where we can just go back in time and actually just do it bar by bar. It's very, very quick. But you need to make notes like this. This is so important. This is, although it's very important to journal, like I've sent Check a video, like since I started my last challenge, I've been writing down everything that I've done, all my, like how I felt during the trades, whether it was a good trade, etc., whether it was a win or a loss. And I've been writing that down physically on pen and paper, but I always have these sort of annotations and notes on my chart as well. And you put them into a little thing, and then that's it. You get rid of it. You don't need to have it on your chart all the time because it just gets a bit messy if you just put it into your section. So this is just trade 1, trade 2, trade 3, trade 4, trade 5, trade 6, and then that's it. And you can just keep following price up. But obviously, as we said, we've now come into a weekly zone, and if the monthly is bearish and the weekly is bearish, then if you're in now a weekly zone, you don't want to be buying into that. You don't want to be buying into that. I bought into that because I was targeting the daily, but this is my system. Remember, you have to remember that you have to test all this, and you have to put the hours in, and it's like it's a lot of hours to be able to see price and how price reacts to certain zones. But as price did its thing, it actually.
How many trade we should play, like replay to, so we can see like this system is working or not?
For a back test?
Yeah.
100.
Yeah,
minimum.
I would recommend around 100, but the 100 doesn't have to be on the same pair. It would help, because obviously you know that pair, you know, over 100 trades is going to be profitable or not.
If you do 100, Ali, you'll get a strike rate as well. So if you did 100 trades, then each one of those trades is 1%, isn't it? So if you've won 50 out of 100, then you know you got a 50% strike rate with your strategy. So you want your strike rate back testing to be higher than live. I.e., when I back test, probably similar to Jake, we'll probably get 70-80% ish.
No,
but
mine's way lower.
Is it okay? My system, I trade slightly different to Jake. I trade slightly higher time frames, as you guys know. So I will get about 70-80% on my back test. In live markets, I get between 50 and 70 on a really good week, but usually kind of 50 to 60. Most of my challenges I've passed at around 55% strike rate. Your live market trading will always be different because of all the factors, you know, greed, FOMO, emotions, everything.
Yeah, I mean, just out of interest, what do you think my strike rate is, Jack?
From your laugh, I'm going to go with 30%, 40%.
Yeah, my strike rate is 33%.
It's about the risk reward ratio, isn't it? About the RR.
Yeah, that's it.
Exactly. Yeah.
So like I will get 2 to 4 R out of my trades on average. Jake probably gets 5 to 10.
I get I don't know if I can do an average.
Yeah, it should tell you in the bottom right when normally.
There you go.
In the bottom right, change that thing to from sum to average. So highlight it all again.
Bottom right.
Yeah, bottom right. Change that from where it says, I think it says sum to average. Literally
Where do I
bottom right hand corner by your clock.
Oh right, Jesus, I didn't even know that was there. Average, yeah. I mean, yeah. So 2.33. 2.33 is my
win rate.
No, that's my average RR on my trades.
Okay,
yeah. But that's obviously.
But that includes break evens, though, doesn't it?
That includes break evens, yeah. So that's obviously going to bring it down quite drastically. But that 33% win rate, starting with a $10,000 account balance over the course of it's around 7 to 8 months, is $49,000 return. And that's only winning 33% of the time. If I could get that to 40% of the time, that would probably jump up to maybe 59 or something like that. But I do agree with how if we have a lot of newer traders, you should focus more on having a much higher win rate, because for your psychology, it's going to be.
I'm really struggling with that because I passed the phase 1 FTMO.
Yeah.
And the second one is really missed last week, so like 8% down now.
Oh.
So it's all about. So.
It's all part of your journey, buddy. You know, this happens all the time. I had a challenge running in October and I failed it because I didn't meet the target within a certain time frame. It's been a really shit couple of months, I will say that. But it's all part of your journey. You know, the amount of accounts that I've got into live, honestly, I think I spent 6 months passing phase 1 and phase 2 of challenges, and I didn't make any money for 6 months because I kept losing them when I went live. Every single time you take a challenge, whether it's a trial, whether it's live, you will get better. You will probably blow this one, and then you'll move on to the next one, you'll get slightly better. You'll probably blow that one, and then you move on to the next one, you get slightly better. You might then get live, and you'll blow the live account. It's all part of the journey. You know, it's all part of learning to walk before you can run. And that's
what makes it so fun.
That's it. It's a gradual learning process that takes time and patience. You know, imagine that you're training to be I used a good example yesterday. Imagine you're a painter, okay, and anybody can put paint to a canvas, but over time your skill will develop till eventually you can paint beautiful paintings that look fantastic. But that's a skill that you have to learn, and there's no forcing it. You know, you can learn the best system possible with the easiest trading rules, you'll still fuck it up. It's part of it, unfortunately. It's the beast, and the ones that succeed are the ones that keep going. You know, me and Jake have quit this loads. We've both quit probably 2 or 3 times. I know I've quit 3 times. Jake, I'm sure you've had a couple of times where you've said, I can't be fucked with this anymore. It happens. It is all part of the journey. But the ones who win are the ones who come back. Because what you need to know, Ali, and everyone else, is that this isn't an unattainable goal. Everybody can do this. It just takes work. We know that this isn't like being a professional athlete. You don't have to be naturally gifted. You've just got to practice. This is like becoming an artist, and everybody has the potential to become a great artist. There are some people that are naturally gifted, of course there are, but everybody can practice and learn to be better at painting, at drawing, whatever it may be. It takes time and hours and practice, and the same thing applies to trading, unfortunately. You've got a long road ahead of you.
You literally hit the nail on the head there. But even the people who are naturally gifted at things, they're not just naturally gifted and that's it. Let's just look at Messi and Ronaldo, for example. They're both, in personal opinion, Messi is a naturally gifted footballer, and Ronaldo worked so fucking hard, but he's still naturally gifted. But his work rate excelled him way beyond any other footballer ever. And Messi is naturally gifted, but just because he's naturally gifted, he didn't just be like, I'm good at football, I'm just going to eat McDonald's every day, I'm just going to drink shit, and then I'm still going to be the best footballer. No, he still has to work every single day to be the best footballer in the world. It doesn't just happen that, you know, I am naturally gifted at painting and I'm not going to practice and I'm still going to make Van Goghs. That it doesn't work like that. Everyone, in no matter what industry, whatever trade, whatever uni degree, whatever, heart surgeons, space engineers, they have to work consistently to become excellent in their field. And this is like exactly the same. It doesn't matter what industry. This is the exact same. You have to work. You have to put the hours in. You have to get experience. Because if you don't, you're going to end up like everyone else, a loser. You're not going to win.
That's it.
So yeah, that's basically it. But just to top it off with this price now. Now that we've come into the weekly chart and we've started, we've broke down in price. So now the 4 hour, I'm pretty sure the daily has as well. The daily hasn't yet, so I probably was a bit hasty in that. So the daily I'm going to leave as ranging because it hasn't actually broken structure, because the major structure point would be down here, but with the 4 hour now mitigating the weekly and breaking down in price, I'm happy to look for continuations down to potentially here to carry on, or even further, and just come and take out all these lows, which, you know, there's a lot of liquidity just lying there. So from this point now, if let's just bring price up to its current point. So Danny, one of our other traders, he literally caught the trade from right here, and it was absolute perfection. It really was perfection. I didn't catch it because I'd refined mine to here, which is part of my plan. I missed it. Absolutely fine. I didn't FOMO into it. I didn't trade on Friday because nothing set up for me. So now we have this breaker structure, and the 4 hours bearish, the 1 hour's bearish, 30 minutes bearish, and the weekly and the monthly is bearish, and the daily is sort of just ranging, right? We had that's that wick on the daily. But if we now come up to here, I'll look for the trade. Or now that we have this new low that's formed, we could just see price do its thing and just wiggle about a bit, and then we could see a push up like that, and then a push down, and then I'll be looking to get in from this zone. And then if price doesn't reach there, we might get another smaller breakdown in price there, and then I'll just look to get in from that zone instead. I'm always just trying to continue with what the higher time frame trends just telling me. That's it. I'm not trying to force anything else.
When you, Jake, I have a question. When you keep you follow the order flow, bearish order flow,
Mm-hmm.
but maybe you entered on the 30-minute when it switched bearish, right? Because you already had the alignment from the higher time frames. But once it keeps pushing down, do you move to selling from maybe a 1 hour or 4 hour slightly higher time frame, or do you continue on the 30 trying to sell it from the 30, or do you have a different approach?
Oh, okay. So what you mean is, let's just say if price did this and then carried on, and then I didn't get an entry here, and then it did this and then this, and then I got this entry, which is great, and I was targeting this liquidity, and then fantastic, good trade. Are you saying that now that, so say this is the 4 hour low, which it is, we've broken the 4 hour low, so this is where you need to be cognizant of higher time frames. We've taken the 4 hour low, so the chances of a pullback are higher now because we've now taken a much higher time frame structure. But I'm still going to be looking to get in from this zone because this is the 30-minute range that we're in. But I am well aware that if we have, let's just say we moved all the way down to here, so this was a strong 4 hour break, so the 4 hour is bearish still. If we did this, I'd still be looking to get in here, but if we broke bullish, then a lot of people would be like, okay, we're now bullish, and they'd be trying to get in here, which is fine. It may work, and then they may get into a trade, but the 4 hour is still telling you bearish. So I would just be waiting on my hands at this point. If we had a 30-minute break bullish, and then another 30-minute break bullish, this is absolutely fine. I'm personally now just waiting for the higher time frames and my 30-minute or 20-minute to sync up with my my 4 hour and my daily and my weekly and stuff like that. So what I'd be looking for at this point is I'd be looking for something like this. Hopefully it comes up to here, which is now the 4 hour protected high, which has been refined to the 30-minute. But if it doesn't, and it just comes up to, let's say, there, a little bit below it, and then does this, I'm then just looking to get in on the shorts again. All right, so I'm always looking at the 30-minute ranges, yes, but I'm not just trying to short. I'm not trying to short if I'm not just trying to short every supply zone on the 30-minute, because if we've had a breakdown on the 4 hour, then I know that if we've had a breaker structure here, then there's a chance that all these supply zones on the inside are just going to act as liquidity to get taken before we see the real move come from either up here or much higher up in the range. And then when you see that further breakdown in price, then all the other time frames are syncing up with what you want them to do, and then price is doing that. That's why you see price come up to a point and sort of stumble around a bit. There'll be a few liquidations here and there, and then you see that huge impulsive move down, which is what Czech preaches, and he's trying to throw it down your guys' throats. You need to wait for this move to happen, which looks like this. You need to wait for this move, because this is what the market is literally screaming at you. It's basically telling you, I am short at this point. There's nothing else. There's nothing else for me to be long from. We've taken all of these lows. I am short. I need to be going short. Price wouldn't move like this if it was just going to carry on bullish. It does happen, obviously, because even we need to be tricked out of the market, because they need even our pennies. They need to use everyone. But this is like hedge funds that get tricked into this as well. But you're just following every single range that forms in the market, and that's on every single time frame. You look at the weekly and you see a weekly range, and then you look at the daily. So now we're obviously in this daily range bullish, but we're mitigating the weekly, being cognizant of the higher time frames. Then you're in a 4 hour range, and this 4 hour range, technically it came from ideally this point, because everything in here, there's no imbalance left to fill. It shouldn't really come up to here. unless it's going to come up and mitigate this daily, this 4 hour, this 30-minute or whatever. Then the 30-minute, now you have this low creates this high, huge move away. This is the range. Then you have the 30-minute. You know, we've just been looking at that, and then you could even go down to the 5-minute, and then we're still in this 5-minute range because that's such a huge move away. There was no chance for any pullback in there because they sold off so hard. So you just need to be aware, and when you do your back test, you mark up every single time frame of what range you're in, whether you're bullish, you're bearish. Right? This has been magical for me because I don't know what you guys do for work, whether you work or not. If you can actually be on the charts all the time, you don't need this so much. But when you're on your phone trading and stuff, like using TradingView on your phone is whack because you can't see nothing. So I know if I have this up to date and I just go on my charts, I can just be on the 30-minute time frame, and I know that the 4 hours bearish and the 1 hour's bearish and the 30 minutes bearish. I don't need to be looking at the daily and stuff because I've already done all that previous work before. I can just know what range I'm in and look to trade that range. So from this point, this is what Czech would do now. I imagine. Czech, tell me if I'm wrong. But if you're bearish in this, which you are, if you wouldn't be looking to get in on something like that because it wouldn't give you the right RR, would it? But you'd probably be looking for something like that to get involved.
Yeah, 100%.
Exactly. So he's then just syncing up the 30-minute with the 5-minute, and then boom, it's the exact same thing, but you're just doing it on every single time frame. You're doing the same process on every time frame. That's all it is. You really need to be robotic about it, and don't try and overcomplicate it either. If you're bearish, you're bearish. Don't try and force longs. Just look for sells. If you're bullish, don't try and force shorts. Just look for longs. I think a lot of people. I spoke to Danny about this when we were in the voice chat. You guys need to get in the voice chat as well, because me and Danny we just talk shit, but we talk about trading as well when we're in there. We're not just talking about golf, believe it or not. That I think the biggest part of being a trader. I mean, I was criminal for this. Danny said he was as well, and Czech, you'll probably agree. But the hardest part is knowing when not to trade.
Yeah, 100%.
And being patient. It's so hard to be patient and disciplined to your system, but when you are, the feeling you get from it is magical. It really, really is magical.
Absolutely.
Even if you lost, you know you traded your system perfectly. You know you couldn't have done anything better. You done everything that you should have, and you lost. The market didn't respect your system that week or that day. That's absolutely fine. The next day and the next week will be different.
That's it. Guys, I'm going to have to wrap up there, I'm afraid. It's been a good one tonight. I'm going to get this record. Well, it's recording now, so I'm going to get this downloaded, uploaded, and saved, so it'll be available to go. So if you missed anything, you'll be able to go back and watch it. Any questions, pop them in the chat. Me and Jake will be on the chat tonight. So any questions, pop them in the chat, and then we'll do another one in a couple of weeks.
Yeah, boy. Fantastic.
Cool. Cheers,
Good
guys.
One, guys.
Thanks for turning up. Appreciate you.
Thank you.
Cheers. See you again soon. Bye bye.
Have a good one.